Mohamed Amran, head of the Egyptian Exchange. Nice to see you at this Africa Investor Summit here in New York.
It's a pleasure.
What are you finding in terms of interest from people outside of the African continent in investing now?
I think there are a very good positive reaction from investors to how they look to the African continent. Remember that in the last couple of decades, everything was toward Asia, and now they are talking about rising Africa. Africa has lots of potential. It's the most growth rate is coming from Africa now, and I guess there is a special interest about the infrastructure in Africa. Remember that if you would like to talk about GDP growth rate and how to enhance that, we need to have huge investment in infrastructure front, and I guess African countries and the African continent at large, they are looking for more investment in the infrastructure front.
Do you find yourself competing against other countries within Africa? Everyone wants the investment there, but you also have to look out for your own country.
Right. The way I did not see it's a sort of competition, it's more than we are complementing each other. I mean, the way I say it is like a spillover effect. When the foreign investor, they have a positive view concerning certain countries in a certain continent, I think this will have spillover effect to the rest. And I guess especially for Egypt, you remember that we have a couple of revolutions, 2011 and then 2013, and Egypt is heading for huge structural reforms in our economy. I guess recently the government is heading to striking a deal with the International Monetary Fund that will secure Egypt with $12 billion from the IMF plus another $9 billion from other IFIs. So I can understand that is not about competing, but it's more about complementing each other.
How do you win over investors who are concerned about risk, country political risk?
I mean, there is no investment without risk, and of course, everybody, it's like risk return kind of formula. So the more risk you bear, the more return you are asking for. And I guess for Egypt, I guess the political risk is going down, and the turmoil in the political landscape is a little bit is more or less over. But it's more about the government agenda of how to push the economic growth in the country to be at the level of 6 to 7% in which we are needing. Last year we have 4.3% GDP growth rate, but we are looking forward for more structural reform, about subsidy, about energy pricing, about the power and electricity, about small and medium-sized enterprises. So I think if we having a clear macroeconomic policies, I guess the country could head to a high level of growth rate between 6 to 7% in next 2 to 3 years.
And what's the role of the Egyptian Exchange in terms of trying to promote that bit of capitalism, if you will?
Right, it's very important. Remember that any investment or any growth rate, it needs a huge mobilization of funding and resources. And it is not only the banking sector, but also through the non-bank financial institutions. And I think the stock exchange in Egypt can play a key role in mobilizing resources, especially for infrastructure projects, for state-owned assets, and also for helping companies to increase their investment agenda and to have a capital increases through the stock market. So the reality is that you cannot talk about the GDP growth rate to be increased without investment, and investment without having a source of funding, in which we are thinking that the Egyptian Exchange is playing a key role in that.
Mohamed Amran, great to speak with you. Thank you for your time.
It's a pleasure.